Hello traders, welcome to another weekly market overview with me, Pierre from PAFX. It have been a couple of Sundays without the weekly market overview. Those of you who have been following me on Facebook knows that it was because I was traveling to the US and I had a great week over there in Florida. Fantastic sun and some work and a lot of drinks, so it was wonderful, and I really needed to be off chart, but I did miss doing this, guys. Miss the weekly market overview, missing the discussions on Facebook and in my trading room. So it was last week was a week where I was like getting back in action, because when you leave the chart for 1 week, it feels like you left the market for a month or so. So I started the last week a little bit slowly in the room, but then from Wednesday and on, I had lots of nice calls in our trading room, and it seemed that the guys been doing great anyway without me. And I was happy to see that, because a lot of them seem to be learning a lot of stuff. And yeah, welcome to another session, guys. Those of you who want to test or try our trading room, you see that we still have this $10 offers for the first month. You can just click the link in the description, click on the site PAFX and read more about that. My next mentoring program batch will start in June, and that registration is also open for those of you who are interested. So let's get things started, and as usual, we're gonna start with disclaimer, guys. As usual, please read it carefully and know about the risk involved in trading, and to understand that this is only my way of trading the market and the way I see it. It should not be seen as a signal in any way. Yeah. Welcome, Carlos. Nice to see you, buddy. Everything is great. Everything is great. Nice to see you here. Cheers. Yeah, we start with the news. We have lots of news next week, as you see. Major impact news only in this screen. So there is a lot of medium news as well. But we do only look in this weekly overview, as usual, to not make it more complicated than it is. We look at the majors only. But as you see, we're gonna have action-filled week, starting with some New Zealand news, business confidence, then the Aussie, we have a speech, we have the cash rate, we have the RBA statement, and of course it's NFP week. Then Wednesday we do have some unemployment and employment change for New Zealand. Lots and lots of news, and it's gonna be a bit of a bumpy ride, I think. And on Friday, the non-farm payroll. The event itself, I'm not interested to trade it, but it is a very, very good signal for me to know the possible direction of the market the week after. And what I'm mostly interested of here is, of course, the average hourly earnings. So I'm not so interested in this number. The unemployment rate is a good one as well, but I think we're gonna keep being around that 4.0. So I want to see the average hourly earnings keep going higher, which is the better indicator here. The last month we had 0.3 higher than the previous as forecasted, and as you see, the dollar been going very, very strongly after that. So let's take a look at the chart. We start with the Dixie as usual. Let's take a look at the weekly chart, where we do have a better view on what's going on. So as you know, guys, we broke an important support here, and been squeezing and squeezing for a long time until last week we got this nice breakout outside of this range to the upside. We were expecting this level to hold based on this previous resistance that may act as support, and it took a lot of time to give us a stronger move with some direction in it, because as you see, the dollar been going sideways for a very long time. So last week we got a nice breakout, and I said in our trading room that if we break out above this level, that may change the midterm trend for the US dollar, because for me this is the 91 was an important level where if broken, that we may change our bias, at least midterm. Now long term, as you see, we're still trading below the 200 daily moving average, which been touched last Friday, and at that same level we had the monthly R2, we had some structure here, and we've been following the US dollar in the room, and when we reached this level we were able to take some pips on counter trend trades, because the dollar was weakening against many, almost all the currency. We went long Euro USD, New Zealand USD, and Aussie USD. So we got some pips on the way down as well. But of course, been trading and following these breakouts. The first one was this breakout, and then we wanted to see a continuation, and that after breaking the 91.8, which was a great break, retest, and continuation. So right now we reached the 200 daily moving average. If we look left here, you see we've not tested this since the break below here, mid-May 2017. So this is the first time we touched the daily moving average. It was Friday, end of the week, we getting to the end of the month, so there is a probability that those who went long here took some profit as well at this level. Does not mean we probably gonna have a total reversal here. Once again, since we broke above the 91, I'm very interested for at least some more up for the dollar. But looking at the RSI on the daily, you see that we are trading at the extreme overbought, and that we may see some correction lower before that. And it is NFP week. There will be some confusions, some fake outs and stuff like that, so we should be aware of that. For our time frame, still a bullish structure. As you see, we are making higher highs and higher lows all the way here. Still a bullish structure. No lower low or lower high have been made yet. We did retest the previous low on the 4 hour, but never broke it. As you see, the close was a little bit higher than the low itself. Personally, I think based on this divergence on the RSI, 3 top divergence here, as you see, we're making higher highs, but the RSI on the 4 hour making lower highs. I think we may see some correction down from that 200 daily moving average we had here and the monthly R2, and looking for a possible correction lower toward the 91 level, where it should be a very, very strong and good level for a bounce higher after some correction down. So this is my idea. I am midterm bullish on the US dollar now, but of course I want to see some correction lower, because even on the 4 hour, as you see, we've been on the overbought on the RSI still. Yeah, first level to watch for next week, monthly R1 and previous structure at the 91 here, which is an important level for a possible bounce and probably a continuation from this level. Yeah, So we're getting close to the end of the month, and there is possibility that we see some more profit taking. That was for the Dixie. Gold. Once again, TradingView keep giving me an extra day here, so this was not a Friday, this is Friday, and this is just another candle that cloned the Friday. Yeah, so we just care about one of these candles. What happened here, that gold broke below the 1320 level here, which was a good support level. And I was expecting after that break that we probably see at least a retest of the 1305 toward the 1300 down here on gold. We didn't get that yet, but we still have a break below structure on the daily. But Friday ended up a bullish day. As you saw on Dixie was bearish day, so if the correlation to work, it was of course that we could expect this bounce on gold. But if we go to lower time frame as the 4 hour here, you see that more clear that we did break below this structure. We broke below this last low. We still does not have a higher high. All we have is lower lows and lower highs. For me, for next week, I think we're gonna see some sideways on gold until we get a clear direction. I think with the USD probably making some correction lower, we may see gold doing this until we see a direction. But the first level I'm looking at for a possible strong resistance here after we broke below this structure, we broke below the 1320. I think that the monthly pivot point and the 1328 gonna be a possible trouble area. As you see, when we look left, we had this flip zone that been giving gold some troubles. Of course, the best levels for gold is up here and down here. As you see, this is the bottom of the channel. That would be the best levels to make business at. Every time we reach the extreme high or the extreme low, we've got much better and faster moves, as you see, from the downside and from the upside. But when we are mid-range here, you see that there is a lot of choppiness at this level here. Yeah, so keep an eye on that 1328. Been a good support and resistance level, could continue, especially if you see a strong daily signal here. That could be a good idea to try to short. But you should keep an eye on Dixie as well, because Dixie, if it give us that correction on toward the monthly R1, that could mean that gold may test a bit higher toward the this level up here, the 200 moving average on the 4 hour as well. Yeah, once again, we're still above the 200 moving average on the daily on gold. I would very likely see a possible bounce down here at the moving average if we reach this important structure now, the 1305. Very important structure to look at, since been tested many times and act as good support. If broken, then you see we have a major room to the downside. Oil keep being bullish, but as you see, squeezing now once again above the monthly R1. It is an important level at this area down here, the 67.50. We're gonna see it much better when we go down to the 4 hour, but we should keep seeing oil to the upside now, since we broke above this major structure. we did break, retest, and continuation, and right now sideways and squeezing scenarios, a little bit tricky to trade. This was a call made in the room that I did send in the room early Friday, that we could expect a retest of the monthly R1 and possible continuation. Now we didn't really get the whole move, we got just a little bit of rejection so far, but you see it clearly here with the squeeze here. We do have this upper range, but the better level is, of course, if we're gonna retest down here. So two levels to keep an eye at if you want to be bullish on oil is, of course, the bottom of the box and a possible bounce. The better level is if we get another retest toward this area here. You see this level, it is a really good level of support and resistance. Yeah, so the 66 down here could act as well as a possible support level and the better level for a possible bounce. But if oil keep holding above the monthly R1, then I think next move to the upside after breaking this possible triangle, next move to the upside, if it happens from here, it's gonna be a momentum move, strong move toward the 70 areas. There's no reason to think about anything else yet. Still bullish on daily and weekly time frame, but as you see, sideways right now would be great to go to lower time frame and start seeing a possible breakouts. Welcome from Dubai, Amarjit. Forex, we start with Aussie New Zealand. We've been trading below the daily moving average for a long time, reached the monthly S1 and got a very nice long signal with bullish engulfing candle down here, which happened to be at this structure and neckline as you see here. And then since then we've been making new highs and higher lows all the way. So since we broke above the monthly pivot point back inside this this range here, this box, I think we're gonna keep playing this box, but now the RSI at the extreme overbought, and probably it need to correct a little bit more. As you see the candles, the last couple of candles, we've got some wicks from the upside, and we do not have the same momentum, but bullish short term it is major, it is still to the downside. But since we've got inside this upper box once again, I think that there is a possibility that we may do a retest to the monthly pivot point, which is a good and a better level to try to take a long from. Going down to the 4 hour, we see that we do have already some kind of possible head and shoulders. Too early to say that, but this could be the reason for some correction down. As you see on the 4 hour, the 200 moving average been acting as good dynamic resistance here, broken and retested many times, and then another breakout flag continuation. So very interesting level. As far as we are above the 200 on the 4 hour, I think we could find some continuation here, and that's why I see this level as a good support and resistance level. As you see, one time here, another test, and another test, and then been acting as resistance many times until got broken by a major candle. When such a support got broken by a major candle, it means usually that it is an important level that got broken. So my first level to keep an eye at is the monthly pivot point, and looking for a bullish evidence at this level to see if we got a possible bounce and continuation from here. Aussie USD, very strong move to the downside. Was expecting it to reach this level down here, the 0.75 down here. We didn't really reach that level before we got this bullish engulfing, but once again it's been going down the whole week in a very strong manner. As you see, we could got some profit taking at this area at the end of the week, and since Dixie as well did a reversal, so it was very normal to see some move to the upside on this one. And there is a possibility that we may see some more move to the upside from this. So if you are interested for a counter trend trade, you could probably find some flags on lower time frame here, but the next level to keep an eye at is of course the retest of this major trend line coming from down here. 1, 2, 3 times been tested and now got broken. So if you are long, I think you should manage your trade somewhere when, if we reach this level here, that could be a possible level for another bounce lower, and that we may reach that 0.75 level. On lower time frame, if we go down to the 4-hour, still bearish structure, no higher highs, no higher lows yet. And once again, if you are holding along on this pair, you want to see this level broken for possible more upside. And when and if we reach this level up here, you should start looking at the trade for a possible managing or maybe taking some profit off the table. CAD JPY seems that it want to continue higher, but after breaking this flag, we did reach a level where we had some structure looking left here, and we had the monthly R2, but there is still possibilities for more up, in my opinion, especially if USD JPY keep going higher. So we've been watching this possible break of the flag. We've got that, and then we were looking for retest of the level and a bounce. We didn't really get the whole bounce yet, but I still see this level here as a possible minor support, and that we could see a continuation from this area, at least to retest the previous highs. Still bullish in my opinion, especially on higher time frame. We still have higher highs and higher lows. The only thing that could argue with that is this swing here, if this gonna be our first lower high or not. So it needs some more clearance first, but I think if CAD JPY would be able to break above the monthly R2, that we probably gonna reach higher and probably test this structure here and the daily 200 moving average. Chief JPY back at that important support. As you see, Thursday candle was a very strong bearish candle. The bulls did a very nice try here to take control. They took control here as well, but they couldn't continue higher, and last week we could not make a higher high on the daily, and the bears did defend this level and pushed all the way back down to that important support now. So I am keeping an eye on this support. This looks very, very heavy, and I have a feeling that there is a possibility that we break below, since there was no continuation in the momentum to the upside. We've got rejection and another lower low. We keep pushing lower, and a break here could mean very good trade to the downside after the retest. As you see, there is not much in this area to hold this pair, so the level here should be defended well. We still have bullish divergence, which make one a little bit more worried about shorting. That's why if we want to short this pair, we want to see a clear break and then maybe short the retest to probably close this gap, and if the break happens, we probably gonna reach this low. No structure at all, but the gap down here may act as a possible short-term support as well. Euro Aussie making life a little bit harder, since it been making lower lows, then making higher highs, and it wasn't easy traded at all, especially with this spike below here. I think when this spike happened, there was a lot of traders that been trapped, but after such a rejection and back inside the upper range, and the day after was another continuation, one should be thinking for a continuation, because it is still as upside trend as you see it, making some correction and then continuation, correction, continuation. So last week we've got another higher than this one, broke and closed higher, and then a retest. So this went well. We had this call in the room, but there was no more than the S1, which was normal target when you trading such in such a like a Friday or so. You do not want bigger targets, because things used to be slow, as you know. So on the 4 hour we do have lower lows and lower highs, but this is not the first time we do have that, and then we continues higher. So for this pair, if we break below this level, we do have this level down here as a possible support, and this level down here. So we should keep an eye on these two levels if we do have a break below the monthly pivot point. For me, the first area for looking for a bullish evidence is the monthly pivot point, to see if we're gonna get a continuation from that level to the upside. Yeah, otherwise we do have this level down here, and the last level should be this support area down here. EuroCAD, after this bearish engulfing candle, we've been trading lower until Friday. I was expecting it to reach these areas down here. We didn't do that. I'm still looking for that test of this important level now. So for me, this start looking a little bit weak now, since we never hold in the upper range. I was expecting something like this, but we never hold above the monthly S1 and in this upper range. So this could continue lower from here. The major swing high never broke these major swing highs as well, and still trading to the downside below the 200 moving average. The first trouble area should be if we gonna retest this level down here. This could give at least a short-term bounce, but of course if broken, if this level got broken, as you see, we do have some more room to the downside, which should be toward this level down here. So on the daily, we still way above the 200 moving average. It could be normal that the price goes back to the mean. We still way from the inner trend line here, as you see. So it is actually still a bullish structure that may be going back to the mean before a continuation. But let's not forget, we are coming from a retest of this major high up here, and the move to the upside here was very, very strong and fast. So keep an eye on this level on the higher time frame. If no break, then we're probably gonna reach this level and then a possible break from this area. Yeah, two levels to keep an eye at on EuroCAD. Euro sterling was a very interesting level we had here, and as you know, I did publish an idea that if we break this level, that we could see a lot more to the downside. Now we broke the level one day, and the day after we got this nice piercing pattern to the upside, going back above support, going back inside this channel, and as you see, we've got a very strong momentum to the upside, reaching the previous structure before making a correction. And when that started, we've been looking to trade this pair. We had our first trade was eyes was on the 38.2 here as a possible bounce level. Got stopped out on that, but then the 618 was even better trade, and this one did make the loss here and much more after the news on the sterling and this very strong bounce to the upside. So on the 4-hour time frame, you see now that this level was broken. There was almost no profit taking at all. So I think traders and investors think that there is more to the upside here, since we didn't really see some profit taking. The daily candle, as you see, a very major one, breaking and closing above last high here. This, if you look at the bullish candles compared to the bearish candles, we do have a very strong bullish momentum, and we should now keep looking for a possible continuation and try to buy the dips. Now next week, especially on Monday, I think we gonna see some correction to the downside. We're gonna have a very wide pivot range, which usually means we gonna go sideways before continuation. We do have a possible inverted head and shoulder pattern now, as you see here, like this. Technically the neckline is broken, but what I think gonna happen is that we're gonna get some possible correction on lower time frame, and then a possible breakout of this flag. So on lower time frame could look something like this. If we got correction toward this level, that could be as well a good possible buy level down here. So keep an eye on this level if we got the retest on next week and a continuation. As you see, the 200 daily moving the 204-hour moving average been acting as a very nice dynamic resistance here and then got broken. So keep an eye if we got the retest of that 200 moving average and this structure here for a possible bounce and continuation. Okay. Euro JPY playing around the 200 daily moving average. Many days here, tested for a break, been acting as good support and resistant in the past, and we still playing around that. I see the 132 as a very important support, because if that broken, then we probably gonna have some more downside on this, probably toward the monthly pivot point in this area before a bounce. On the 4-hour time frame, you see that we've got back inside this box, and now we have a higher level on this one, actually like this. So we've been talking about this box in the room when it was this little one. It was a clear support level here, as you see, got violated here, but right now the price is back inside that box, and I still see the 132 as an important support level. Any close on the daily below that should signal possible continuation lower. That would be as well a close below the 200 moving average once again. But since we are back inside this box, and if we want to see this as a possible fake out, there is a possibility that we keep playing this box until we see a break outside of it. So very important level to keep an eye at is the 132. If this was like, if we go to the 1 hour, if this was a real break, we wanted to see the break happening and the retest to fail to enter inside and make something like this. But the retest did enter back inside the box, which make it a possible fake out here, and we should keep an eye at first at that 132 once again, see if it's gonna give another bounce higher from this level. As you know, guys, you know that when we've got those boxes, I like to buy the low, sell the high until I have a real breakout. Yeah. Euro New Zealand broke above previous highs, like up here, as you see, reached the monthly R1, and Thursday was a nice sell signal on the daily, bearish engulfing candle. Friday, spinning top, no real momentum continuation, and after such a move with many bullish days, one could expect a possible at least profit taking or some correction back down to find some more buyers. As you see on the daily time frame, we did a retest of the 200 moving average. We're still trading above that. The retest of the moving average was at this previous nice support structure and the monthly S2 before a continuation all the way up toward the monthly R1, and now we probably having some correction. One could take some Fibonacci retracement tools and start looking for possible confluence levels. For me, I do like the 618 retracement much more, but as you see, the 38.2 could be a possible level of structure confluence as well, looking at this trouble area here. Looks something like this. So monthly pivot point is the first level that we should be looking at for a possible trouble area on the downside for this pair. This could be your first level to look at for a bullish evidence for a bounce higher. But if it went even lower to the 618, that would be even better in my opinion. Take another one, and we see that we do have structure at that 618 as well. So keep an eye on that. This structure, this level up here, first level to look for bullish evidence for possible continuation, or the 618 area and this previous structure down here. USD finally broke out this upper range, but it was almost pretty sure that we're gonna get some bounce at this support level. As you see, previous structure resistance that may act as support and did act as support. We've been looking at this level in the room, and we got the bounce that we expected. Since been going down all the way during the whole week, this could be as well some profit taking. It does not need to mean that new bulls did enter the market to push it all the way up, but if you are trading long here, there is nothing wrong with that. We're still above the daily 200 moving average. You are trading from a possible nice support level, but there is some troubles on the way. Since we broke below the monthly S1, we broke below this structure up here. I think you should keep an eye at this monthly S1 level, manage your trade, take some profit probably, because this could happen that we get another bounce down after the retest. So this level, another level that got broken by a very strong candle. It did need a very major candle. It was during the news and during the after the Draghi speech. As usual, we see confusions during this kind of news, especially the speech. We've got a move down, a break above. Many traders went long. Stop losses below here in this area. Those who went long surely had some stop losses in this pocket here in anticipation that the market will continue, and then total reversal, taking out all these stop losses, which give this momentum in this candle. Yeah, so once again, keep an eye on the monthly S1 as first level of resistance. The second level would be somewhere in this area up here. Okay, but I think monthly S1, this one is a stronger level, and let's see how it reacts at that level. If euro does this, then there is a possibility for more down, or if we're gonna reach this level before another move to the downside. Seems like the Dixie to correct toward that 91. There is a possibility that we move a little bit higher on Euro USD as well. Sterling Aussie and all the sterling pair, as you know, got a major hit after the news. Broke below this box here. Very strong candle. The close was at the low. The close was the low of the day, breaking the range here. As you see, there was no profit taking, so the traders seems to think that this have a lot more to the downside, and I do think the same. So if you are holding a short, the first structure that could give you some trouble would be this area down here, 1.7950 ish. As you see, if we look left here, this was a good resistant level that may give you some trouble, but the best objective would be if the market gonna reach toward this major and more important support before a possible bounce to the upside. So for Sterling Aussie, I think we should try to sell the rallies. Would be great to see some more down on this one before it start giving us a correction higher back toward this level and then down again. And this look like almost the same on all the other sterling pairs. Once again, our first lower high here after this move to the upside. In this case here, the low is not broken yet, but once again you see a very strong candle close at the lows back below monthly R1, and it seems there is a possibilities for more down. First trouble area should be at this level down here, as you see structural resistance and trouble during this move here. For our, we want to see, if you are holding a short trade, you want to see a break below this low here. Next trouble gonna be down this down at this level. Sterling CAD, same story, broke previous low, broke these lows as well, did stop at the monthly S1 as you see here, closing at the lows, and there is more room to the downside. First trouble area should be down here at this level, that we may see some bounce higher. This one is very interesting, especially if we break below here, then we probably gonna test the monthly S2 as well. So same scenario here, sell rallies, best sell in my opinion if we got a retest of this structure up here and then continuation lower next week. Sterling USD, first to reach support. As you see, the previous ones had some room to the downside, but Sterling USD did reach a support level already. We know that the Dixie started some correction or rejection or profit taking at that monthly R2, and now we are trading at the bottom of the channel. We do have monthly S1, we do have previous structure. So this one is a bit more tricky because you want to see a break below this major swing low to really see some more to the downside. As you see, the 200 moving average still coming here from below. I think let me put the 100 as well. We just broke the 100 moving average last week with a strong momentum. Could be your signal that there is a possibility for some continuation lower, but you need to keep an eye on this structure because it is an important structure. We do have the channel, we do have the monthly S1 all at that level. But if we see a break, then we could sell the retest because we're probably gonna reach monthly S2 or at least test the 200 moving average on the daily. For our time frame, we do have some bullish divergence, as you see, between this low and this low on the RSI, and between this low and this low on the price. So you see it more clearly here, the support level I'm talking about at the 4 hour, yeah? So no need to short at support. You want to see it broken if there will be more to the downside on this one. You could as well, if we get a bounce, start looking at this level as a possible sell area. Once again, probably find some more seller before the breakout. I don't think we're gonna see the breakout early next week. I think we may see some correction higher first. New Zealand USD, reached a nice an important level here after breaking below this important structure, broke below the range, been trading to the downside in a very strong manner, as you see here. Then we broke below this important structure and we reach monthly S2 at that same level, 618 Fibonacci retracement of the whole move, and previous structure, as you see here, getting a bullish engulfing last Friday. So same here, after so many days to the downside, coming to the end of the week and end of the months, could be some profit taking of at this level. Now trading below the 200 moving average and breaking major structure. For a trend continuation, I think your best pick level to sell this is up here in this area, to wait for a possible retest and then take the short. Counter trend traders, you have already your signal down here, 618, as I said, monthly S2, previous structure, bullish engulfing on Friday. You need to go to lower time frame and start seeing some higher highs and higher lows on 4 hour. That didn't happen yet. For this pair to have a chance, at least a chance to reverse here, we want to see this first structure get broken with the close above it on a 4 hour time frame to probably see something like this and then continuation higher. Yeah. But once again, that would be a counter trend trade. The safer one would be a retest to this level, and let's see if we have some Fibonacci retracement confluence at that same level. We do have actually the 38.2 at that level. Daily 200 moving average is up here. That would be the much better level to short it from, this level up here, in my opinion. USD CAD still holding above this support, but last Friday was another rejection. As you see, Wednesday was a clear rejection at the 618 of this whole move. Then Thursday did a try to move higher, and Friday was the rejection. The bullish momentum was a very strong one here until we reached this area, start going sideways, but rejection, couple of rejections now. I see this level here as a very important level of support right now, and let me take rid of the NFP levels. So as you see here, the 200 moving average on the 4 hour, the structure area up here, looking left, we had a good support level. So for this to move more to the downside, we need to see a break of this structure, but we do have already some nice bearish divergence, looking at this three top divergence here. After this and this and this high, all of them make higher highs, but the RSI giving us a strong bearish divergence, bearish engulfing candle here, possible double top, but we still do not have the break. For more downside here, we want to see this level broken, then go down to lower time frame, 15 minute, 1 hour probably, and try to find an entry on the retest, because there is a lot of room to the downside here. As you see, the first trouble should be the monthly R1 and this swing low here, and if that broken, there is even more room to the downside. We could use our Fibonacci retracement tool as well to measure this particular move, and we see that the 38.2 is at this structure here, and we do have the let me get this back, and the 61.8 is at this structure down here. That could be a possible level where you could target. So keep an eye on this level. We want to see this broken for more downside on USD CAD, especially if oil break to the upside. USD JAPY, another very good performer last week. Strong move to the upside until Thursday. Some indecision. Friday was a clear bearish engulfing here, and one could expect some correction lower, especially a retest at to the 108.50 could be a possible level to look at, because we do know that this was a good support level in the past that now got broken and may act as support as well. So I would say keep an eye on that 108.50 level for a possible bounce in continuation. If that got broken, our next support level would be down here at the monthly R1. But very good bottom here and higher highs and higher lows, and it needs some correction lowers, but I am looking at the 108.50 as a first level where I will be looking for bullish evidence on the lower time frame, the 4 hour in this case. Bitcoins still fighting to break above that 200 daily moving average. Last week when we broke above the 9,000, we were expecting a correction and continuation higher. That didn't happen. We've got a bearish engulfing day, and since then been going sideways, playing at the support level itself. As you see, the 200 been acting as good resistance, was support here in the past, and once again been acting as resistant level. Right now sideways, in my opinion. I want to see at least a break of some structure on lower time frame for more downside, so keep an eye on this level. We do have a try to continue higher, but this is our major high that gonna be a very, very important resistant. The 9,750 is an important resistant here to break, because at that level we had the 200 daily moving average. This need to be broken for more up, and if we break below this structure here, which I think we may see, then there is a possibility that we test the 200 moving average on the 4 hour and this previous structure down here. Very interesting chart right now, especially when we look at it at the daily, seeing this as a possible fake out, and this is for me now is the mother candle of this range. So you could mark the high, you could mark the low of this candle, and wait to see a break of this level, or trade the bounces between this area, because there is a possibility that we see some more sideways here before a possible break to one side or the other. Dow also fighting the 200 daily moving average, but this one is the price is coming from the upside, testing the 200. Very, very important level to keep an eye at. As you see, the 200 been acting as good support since we broke back above it here. Tested, bounce, tested, a very strong bounce. The last time we tested the 200 was during the Trump election back here. Spike below and then continuation higher, and now we've been testing it 1, 2, 3 times. So it is an important, very, very important dynamic support to keep an eye at. I think coming from the 200 moving average now, trading back above the this level here, 24,200 is an important level. So we are inside this upper range, and there is a possibility that we may see some continuation higher. This level up here and this major candle gonna dictate this inside range now as a possible mother candle. So as far as we are trading above the 24,200 here, there is a possibility that we may test higher on Dow. Once again, based on the importance of the daily 200 moving average, there is a possibility that we move some higher. As you see, another higher low been making here. This one was a little bit higher, then we broke above, making a higher high, and now we do have another higher low without breaking and closing below this swing here. So that was the last market, and we are back to the Dixie, guys. Couple of minutes to see if any of you have any questions or any chart you want me to look at. Otherwise, we're gonna call it a day. For those of you who've been here for the first time, do not forget to subscribe to the channel, guys. Those of you who think these weekly overviews are a good thing to do, please hit the like button. And let me know if you have any questions, guys, in the chat. I don't see any questions yet, but I know that we do have at least a 30 second of lag between what I say and until you hear it and you write something. So I'll give it another 30 seconds, and if there is no questions or anything else, we're gonna call it a day. You're welcome, guys. You're welcome. Thank you for being here. Well, I don't see any other questions, so thanks a lot for being here. See you out there in over Facebook, Telegram. My lovely students, see you in the room. All the links you need to know about are in the description below, guys. Just click on the links and they're gonna take you to Facebook or Telegram or my homepage. Thanks a lot, and see you out there. Trade safe. Bye bye.